So today we have a majority of our panel who were joining our panel in the workshop. So we're doing this panel for free. So thank you for joining. Let me a simple introduction to our panel members. So there's Alan Lim. Alan, you want to describe yourself?
Alan Lim, farmer. I own I founded a farm called Crop. It is currently situated on the rooftop on the JTC building. It's a production grade vegetable farm.
Thank you, Alan. We also have Ying Chen. Ying Chen, maybe you want to introduce yourself. You just joined.
Hello. So I've recently become a fish farmer and fishmonger. I represent a company, Barramundi Asia, and we are the only company in Singapore that does what I call marine ocean farming. And we farm this fish called Barramundi, which is a native fish in Australia. The Aboriginal word is called large-scale fish, and we grow it up to 4 to 5 kg off in the southern islands.
Thank you, Ying Chen. Yip Man, do you want to? He's my longtime friend. I reconnected with him because of this workshop. Yip Man, please.
Okay, lah, Hot Man. Yip Man is the Kung Fu master. Anyway, hello everybody. So I'm actually a tech guy by nature on my training. That's how I got to know Tech Mo. We went to the same company. We work at the same company. But 4.5 years ago, got into food and agriculture as a CEO of Jiling Food Zone. And then from there, I got exposed into this new field called food and agriculture. And then I think last March when Beyond Meat IPO, so the whole wave about AgriTech kicked off. I was very fortunate, worked in a family office looking into AgTech and food tech. And I invested in a company called Hungry Planet, and that's my introduction into this food tech world.
Thank you. Thank you for joining us today. How about John Friedman from AgFunder?
Yep, thanks very much, Mo. Good morning, everybody. AgFunder, just as a brief background, is a agri-food tech focused domain specialist venture capital fund, and we also have a media platform called AgFunder News. We started off in San Francisco in 2013 to promote greater education and awareness and investment opportunities in the agri-food tech space. The company expanded out to Asia last year as part of the Singapore government's sort of 30 by 30 and food ecosystem development initiative. So we run an accelerator program in Block 71 here in Singapore, Singapore's first dedicated agri-food tech accelerator, where we bring in companies from around the world to help develop and scale up with technologies, I guess, applicable for the Asia food system. So our narrative is very much, this is a long-term game. This is needed in terms of creating a more sort of sustainable food system, given all of the macro dynamics around population growth, climate change, etc. So that's just a brief background on AgFunder. Myself, I'm an angel investor in a handful of various agri-food tech related companies, most of which are here in Singapore, and generally familiar with the other panelists here this morning. So really happy to be a part of it, part of the discussion.
Thank you very much. Why don't we dive into the first question? So we've got a list of questions from different angels. So I'm just going to moderate this question, right? So the first question is really the elephant in the room, right? Given the situation associated with food security in Singapore, this situation has come earlier than we expected, right? So with this current situation, maybe Ying Chen and Alan, you can share, how has this business affected your business? I mean, how do you deal with the sudden increase of demand?
Ying Chen, you want to go first? Or? Okay,
Go ahead. You can.
All right. I would like to do a bit of sharing for what we have gone through in the last maybe about 1.5 months. Essentially, what happened was about 1.5 months ago, we started to see that the Singaporean cities around the world that are facing the possibility of lockdown started to have its population somehow engaged in quite a bit of panic buying. And that impacted Singapore one time about 1.5 months ago when you see the toilet paper run. And I was really about 4 p.m. on that Friday before DOSCON Orange at the supermarket, because I walk the supermarket every day to look at the stocks and stuff. But at 4 p.m., we realized that things are going to be okay. DOSCON Orange was announced at 2 p.m. But by 7 p.m., the shelves are empty. And then at 9 p.m., really the Facebook and social media started to post up pictures of people with big trolleys of food and all. And that even made things worse because the next day, the panic buying continued. As a farm, we were quite glad 1.5 months ago because nobody raided on the vegetables and eggs. And those were somehow a specific vulnerability for Singapore because they are all fresh and perishable. 2 weeks ago, we started to see more uptake of the local vegetables and eggs because of the Malaysia MCO. Again, there was a real scare there because there is no viable way to stockpile fresh vegetables and eggs, simply because if you put them in a freezer, they would burn, or rather they would sort of crumble and wrinkle. And if you put it in storage, it can last more than 7 days. It cannot last more than 7 days. So what happened for us when that MCO happened was we went on to harvest every available vegetable in our farm, including those that are not really matured yet. So basically, if you are looking at vegetables at a particular period of growth, it is actually edible already, but we will always wait for it to grow a bit bigger so that it makes up the grammage. We emptied the whole greenhouse to stock up the shelves, thinking that the causeway would be closed and Cameron Highlands would not be supplying. So Tengmo was asking me just now, how did we increase our yield, right? Given maximum the standard capacity, we didn't increase our yield. What we did was we basically over harvested, and the impact is that the next 2 weeks we actually have a very low production. Now, why did we decide to do that? It is really because when we set up ComCrop, it was really a way to act as a shock absorber against disruption. We did not expect this kind of disruption to happen or COVID-19, but should there be a disruption of between 1 day to 5 days, the local community could really push forward enough stocks to sort of, for lack of a better word, tong the situation, so that the rest of the agencies and food suppliers, importers, distributors would then find other sources to come in. So I'm quite happy in a way that we helped to secure people's psychology for a couple of days. I'm quite sad now that my plant, the farm is literally quite botak now. So that's our experience in the last couple of weeks. Yeah.
So I'll jump in to share, I think, the perspective of Barmani Asia, and I think it's going to be a very different perspective. First and foremost, to give context, Barmani Asia, we farm our fish up to 4 to 5 kg, as I mentioned, and that's a period of 2 years of very, hard work and a lot of love going into nurturing the fish to that size. As a result, there is simply no way that we can sell the fish at a very affordable price. Because the industry and our scale at the same time is also very small, so our sales price or if you use a trade term, average sales price is actually rather high. And for us, we have this trade brand called Kubara. And if you go to our e-commerce website, it's kubara.com. And actually, we're running a promo right now. But Kubara, as we created it, is really to us, a premium brand, a local brand where we do farm to fork in Singapore, and we deliver even on e-commerce through an unbroken cold chain to our consumers. So, behind the introduction, really, what I'm trying to share is actually because we are a premium brand, and even despite the shock, we actually suffered quite a bit of losses over the past 2 months. Majority of our channels is actually hotels and food services. And of course, as a result, that hit us quite badly as well, when the food services and hotels all had to, shut down, do social distancing, traffic flow sort of got reduced significantly. So for us, hotels and the HoReCa industry, it fell by around 50%. So of course, during the period of shocks, we still have our e-commerce and retail channels. That's usually to us about 20 to 30%. So we did see an uptake, specifically, trending positive for our e-commerce over the past 2 months. It has been increasing, and we are quite fortunate that we have diversified our channels to e-commerce rather early. That was since 2015, so that we could actually have that cushion. But specifically for the spikes, I think it was quite a logistical nightmare for us, because just like what Alan mentioned, actually more specifically for us, on 15th of March, when we first heard about it, the Malaysian lockdown happened. The stocks were all wiped out. I think our guys have to do overnight for the past 2 days to make sure that we can keep our retail shelves stocked with our products. But that being said, it is not a big channel for us. And for us to harvest, we have to go out to the sea to do last minute harvest, and that it's more resource intensive. So I would say that to support the kind of overtime work, actually it was more costly than our day-to-day normal operations. So it was quite a double whammy for us also, because to us, even as we sell, it's higher cost, but all around, because of COVID-19, I think our sales took a hit because of online sales, and the normal tonnage that we harvest, actually we are harvesting lesser as well. So at this point of time, given compared to normal circumstances, we actually have more fish to sell. So we really are trying to push e-commerce, and if people want to support us after this call, please head on to our website as well. We're running a promo.
All right. So the other question would be, in terms of your company's cash flow, did this situation impact you? And if it did, what did you do with it?
The cash flow for us we 99% of our vegetable goes to the supermarkets, either online supermarkets or basically the physical retail stores. Fair price has been pretty fair. In this case, we are maintaining their payments. However, because of the sudden spike, right, we are expecting cash flow crunch. But the latest budget that was announced by DPM is really very helpful, because we are sitting on a JTC land. Rental continues to be an issue for us. And after DPM's announcement, we are awaiting the JTC to come back to us on what sort of help they can do. Today, rental takes up almost 30 to 40% of our costs, and that is something that we really was unexpected. But I think moving forward, we are looking less in how to conserve cash, and actually looking how we can stockpile the consumables, and making use of our cash very carefully to make sure that we have enough to grow. Supply chain disruption will impact AgriTech, because the seeds, the nutrient, the growing media, all comes from overseas. And we need to have adequate stockpile for those so that we can run along the longer lap, right?
So
yeah.
similarly to Alan, actually we are also facing a cash flow situation. But of course, I think because of e-commerce, now we get cash upfront. So I think that there is some cushion right there. But just as a whole, because our business is really, we have to put a lot of feet in the water over a 2 years period. The investment upfront for us, the cash flow commitment upfront to us has always been very, very high. So in this situation where, there is inability for us to sustain our sales, it definitely impacted us. And we similarly had to make a lot of adjustments and even cuts internal to expenditure, capex, just to make sure that we can keep our usual business as usual scenario. So we really welcome the government's sort of measures, whether it is the working capital loan and also the short-term loan, temporary bridging loan that has come in. I think those are things that will really help us. On top of, I think there is the work support package that's coming as well. So those are measures that we hope to tap into sooner rather than later.
Yeah. Do you go back to your existing investors to see whether they can support you over the current situation? And what's your current investors' view over this situation?
So I'll just comment that actually at the moment, Barramundi Asia is actually fundraising as well. And this has been an effort that's been going on for the past few months. So we have been, actively fundraising. And for us, actually, maybe even going back to the question about cash flow, our operations, spans beyond Singapore. We acquired a farm in Australia, the largest ocean barramundi farm in Australia in 2018. And we harvest a few thousand tons there. And we are also setting up in Brunei. So for us, we are already at a growth stage, and we are doing a lot of this expenditure and expansion since last December. So while we are doing the expansion, when then COVID comes in hard on us, then suddenly we really stop a lot of these plans. So it was really very disruptive. So at the moment, we actually think that this is a good time for us to do some of those building because fish does take time to grow. So, we hope to come out of the whole COVID situation strong. But it's a dilemma because I think at the same time, when you're raising money now, people are also a little bit cautious. So we are, in fact, trying to raise money from our international shareholders, new shareholders, and tapping on government loans. So we are trying to look at all sources of financing to sustain us and try to tap on growth opportunities while it is the lull period.
This is a good segment to introduce our two investors on the panel, Honman and John. So maybe you can share on your investment in AgriTech in this situation. Have you invested or how do you see startup asking for money in this situation? Maybe John?
Actually, I was going to defer to Honman first, but
I knew you were going to do that.
Age before beauty, sir. Go for it, Honman.
No, you go for it. You go for it.
Okay, fine.
I gotta respect the camera.
No, okay. So to answer your question, Tecmo, and I think both Alan and Yingchuan have articulated the realities quite clearly. Obviously, when you're investing in private companies as an angel investor or a VC, you don't have to weather the sort of sticker price volatility as a traditional public market investor would in the stock markets, and obviously the volatility which we've seen or at least observed in the last several weeks in global markets. The fact of the matter is, however, while a company like Singapore Airlines or any other sort of publicly listed hospitality or food and beverage company may have lost 50% or more of their share value, nonetheless they are still listed and afloat and can rely on the public markets to continue to sustain them. The same is not necessarily true for private companies, obviously, and as Yingchuan said, he's actively out in the market right now fundraising. We should speak about that later, Yingchuan. But I think what we've seen from the ag funder side, there's absolutely no let up in obviously new companies, new startups coming onto the market, existing companies, for example, in our portfolio, going back to the market for funding. Obviously, one of the critical questions that you look at as an angel investor or a VC is the cash burn rate and what the length of the runway essentially that any private company or startup would have in their war chest to sort of see them through these difficult times. There was a good little analysis of the state of private market funding done by CB Insights recently. Just looking at the quick numbers, the headline numbers, they expect private market funding in the first quarter this year is on pace to reach 77 billion. Now I think this report came out about 12 days ago, and as most people probably know, CB Insights gets a lot of their intel or data. I guess it's perhaps more skewed towards the US markets. But nonetheless, that 77 billion number is down more than 16% compared to the previous quarter and nearly 12% down year on year from Q1 2019. So clearly this COVID environment is already taking an impact or has already taken an impact on the amount of capital coming into private markets and startups. And my personal view is no doubt that's going to continue. I imagine Q2 will be an even steeper decline year on year. However, I think we just have to look back and we can look back to previous scenarios of market downturns, etc. One of the sort of anecdotal comments was, back in 2008, during the global financial crisis, that's when a number of today's kind of unicorns were actually starting up. The likes of Uber was, I think their first pitch deck was touted around the markets in 2008. So there's something to be said, I suppose, from an investor's perspective about the opportunity that now presents itself in terms of, you're less in a rush. I guess, the power is in the investor's hands to deploy their capital compared to maybe just a couple of quarters ago when, the markets were at the peak, both public and private. There was this sense of a lot of hype and momentum and frothiness, even in the food tech space by the middle of 2019, post the Beyond IPO, etc. Brand new startups, pre-revenue, maybe just a couple founding team were demanding some pretty high valuations just for a smart idea. And clearly that frothiness has been taken out of the market. So for an angel investor, it is a good time. There's still a lot of deal flow coming out. Obviously, if you're an established startup or you're already incorporated, you need to continue raising money. I'll leave it at that.
Right. Onman?
I was going to say that actually the startup that I have invested in is actually quite fortunate to be in an industry where investors in Asia and the US continue to have keen interest. I mean, if you look at it, I think it was on the 17th of this month, Impossible Food, which has not IPO, has managed to raise $500 million US dollars in its latest round. So in this space, there's no lack of interest in investors, both in Asia and globally. And then for us, we are much smaller, of course, but we also share the same trend, as in we have more investors interested in investing in our Series A round. We just closed our notes round, than we can actually take in. Having said that, the overall macro environment, of course, we get affected by it. We do have just one family office who committed to coming in Series A, decided to pull out, and mainly because they are in the hotel and hospitality industry, because they need the fundings to go save the existing investment. Other than that, we are actually oversubscribed. So I think for our industry, as I mentioned, we're quite fortunate because we are in this upward trend. But it also means that the other startups that don't have a product, don't have existing customers and revenue may face some challenges.
So the question that I have for investors or VCs and family offices now is, does it change your investment thesis, how you select your companies? What measures have you done to look at the companies, right? Does it change your criteria? First question. Number two is, when you decide to invest, does you try to get a lower valuation? Does you reduce your ticket size? Can I just have your comments over this? How have you changed your investment philosophy or approach in this situation? Onman, you can start there.
Okay. Well, one thing I learned about working with the family business is they are quite individual. They have their own preference. But in this space, especially in the plant-based and AgriTech, I see a lot of family offices having a goal, and those goals are quite aligned to the ESG goals, the environmental sustainability and governance, especially in environmental and sustainability. So when they invest in a company like Hungry Planet or Plant-Based, the goal doesn't change, because with this COVID-19 virus outbreak, it actually reinforces their whole outlook to say that, hey, we got to do something about change the way that we have been consuming, change the way that we have been growing food. So that basic principle doesn't change, but what changes is still we got a lot more better quality, better choices, startups or investment to pick at, and it's a very good time to look at the stronger one at a more reasonable valuation.
Yeah. How about John?
Yeah, I think just sort of picking up from what Honman mentioned in terms of the type of investor or the mindset. As an angel, and again, I'll just sort of put into context, I started my own sort of investment experience specifically in the agri-food tech space as an angel before joining AgFunder. I think it's very important to consider the other investors in the company that you're looking at, the other investors on the cap table, to give you a sense of somewhat security in terms of the potential follow-on and commitment, this sort of institutional commitment, or if it's basically, I'm in my mind, I'm trying to separate fellow angels regardless of how influential or successful they may be, angels and family offices versus, say, institutional investors, because as Honman mentioned, and we've shared this same experience whereby as AgFunder, we're raising our funds, and we've been speaking to a number of potential LPs, some of whom would be considered high net worth or accredited investors, others would be family offices. Obviously, these individuals have had to deal with the recent stock market, both sort of wealth, deterioration of their own personal wealth, and therefore might not necessarily be willing to commit into a fund structure, or others would be running businesses and potentially considering an investment as a sort of ancillary opportunity, but now their own sort of operation businesses are cash strapped and they need to turn their attention to that. So let's say that group of investors had made up the bulk of the cap table of one particular startup. If that startup goes back to the market, to those same investors looking for another round of funding, those guys are clearly going to have sort of distractions or not necessarily be focused on that startup's need and personally and focusing more on their own sort of company's needs. However, in the institutional side, as Honman mentioned, there's a growing investor base who are looking at more sustainable, more impact-driven investments. And honestly speaking, I can think of no other industry or no other sector that ticks as many sort of sustainability goals or boxes. I mean, if for a very sort of simplistic metric, we can talk about the United Nations Sustainability Development Goals, right? Agri-food tech, I believe, is in the strongest position to tick all those boxes, the SDG boxes. And so for those institutional investors like impact funds or family offices with a defined impact mandate, you know, they will, you know, they're mandated to continue to invest in this space. And when we're looking at agri-food, whereby, you know, you can relate your sort of business proposition to, you know, increased food production or sustainability or even sort of urban agriculture, the way that they tie back into the SDGs, no matter what the sort of impact metric is or sustainability metric is, I firmly believe that this class of investors will continue to support the agri-food space, and that provides some, I guess, confidence when you're looking at a deal to see sort of who are the other investors, either existing on the cap table or coming or looking at the deal in that round that you're considering.
All right, so guys, both of you have avoided my real question, right? Are you reducing your bite size this round and this situation, or are you asking for a lower valuation?
Okay, sorry.
Sorry, I'm a very insistent questioner.
No, that's fine. Yeah, look, so let me speak on behalf of the ag funder side. As I mentioned at the start, we run an accelerator program, and that provides the majority of our sort of deal flow. Well, that's not true. Deal flow comes from the platform, but I guess through the accelerator that acts as our, you know, added sort of due diligence process with these companies, which we've already shortlisted and vetted, et cetera, et cetera. Truth be told, without giving away too much, you know, we're looking at ways of, you know, maybe tweaking our investment framework that we used for the first cohort, and part of that is reflective of, you know, working with the Singapore government. I mean, we're here in Singapore. There's a you know, conscious reason why we set up the Ag Funder Accelerator here in Singapore to support the government's vision of, you know, developing the food ecosystem. There's obviously, you know, working with someone like Alan at Comcrop and the other sort of existing urban farming players in the ecosystem, I think is very important. So to answer your question, Tecmo, in terms of clip size, I think from our perspective, we're sort of reevaluating the next sort of 3 to 6 months in terms of what's most important. And if that means rather than invest 125K, which is our current model, in 10 companies, global companies, and bring them into Singapore and let them do their thing, maybe we'll just do, you know, 5 local companies at 200K to support the local ecosystem, because that's where, you know, capacity is needed. They've got the infrastructure already in place. They're here in Singapore. So I think we're shifting our view and our investment methodology to fit the needs of the time. Hopefully that kind of provides an answer.
I think the Singapore government and the Singapore startups would be very, very happy to hear this. How about Honman?
Hey, yeah, don't mean to avoid your question, but I was looking at it because for family office, we are very conservative. So meaning that we don't overpay. We tend not to overpay. We have a very long horizon. We are known to walk away from deals because it doesn't fit into the kind of mission we're looking at, as well as if it's too expensive. So right now, I think the startups that we're looking at, they are a lot more realistic and a lot more willing to talk to us in accordance to the guidelines that we have. So meaning we are investing the same amount of money, doesn't change, but we get a lot more choices, a lot more quality choices. With this crisis also opened up and accelerated our plan to look at more upstream, because we are now less focusing on innovators, meaning who is going to make the next best meat or next best burger, but looking upstream and said, can we invest in the factories, the food manufacturing plants, specifically for plant-based meat, for the alternate source to soy or pea, essentially driving the cost, because the biggest problem for plant-based meat industry is actually the cost. And the holy grail is, of course, getting the price of plant-based meat to be on parity with real meat or even lower. That will really drive the volume. So these are the areas we're looking at. And because the family office that I'm working with has a background in brick and mortar, they feel a lot better if they can see the factory, the office space, the land and the plant machinery. So these are the areas that not a lot of investors are going in, but we are going in.
All right, thank you. So, okay, to all the attendees of this, you can always go to the Q&A and press the button at the bottom bar on this app, and then you can type in your question. So the first question actually came from Lance. His question is, which essentially what Hanman said. When you're looking at new technologies such as gene technologies such as CRISPR, right? And how do you think about this? Do you think it will be a new norm in agriculture?
Sorry, is it? Can I take a stab at this?
Yes, Alan, please.
Okay. I'm recently sitting on a panel that is deciding and crafting the agriculture standards for Singapore moving forward. And I think we're going to release this new set of standards hopefully by end of the year with Minister Masagos. Now, what was really hotly debated in the committee, consisting of academic, farmers, AgriTech, is really about where does all this go towards, and how do we then create more transparency in the end produce that people eat. So, for example, today, anything that you would spray on the plant or on your broiler chicken is considered pesticide. But if you give it a closer look, there are a lot of naturally occurring compounds that are currently classified as pesticides that is naturally occurring and therefore doesn't impact your consumption. It doesn't have environmental impact and health impact as well. So coming to this, the same principle will be applied to genetic editing. Whether there's enough transparency in the usage of CRISPR for modification is important. But what is more important today is in our ecosystem, we do not have a facility like this or research, deep science, deep agri research facility in Singapore. I think there's tremendous opportunity simply because we have an infrastructure to be agri powerhouse. But what we really need is to attract companies to come to Singapore and set up such facilities. And then we as a downstream end user of genetic modified seeds or newer biotech or AgriTech technology will appreciate it a lot because that will help us scale really quickly.
Xin Chen, do you have a view on this? I just see your answer on the chat.
Sorry, I answered too fast.
Yeah, no,
I thought we could just go into that.
Yeah.
Well, so from aquaculture perspective, and maybe just to talk about CRISPR in general, I think like what Alan said, if you want to talk about whether it is being mainstream, I guess you can look at the entire value chain of the farm. So for aquaculture itself, we have not really seen it in the seed stock, which is the baby fish and the parent stock. So while there has been a lot of research, I think in the theories and scientists in the labs, we haven't really seen much actual production. So similarly, you have maybe your feed, whether the feed components have this kind of GM materials. Unfortunately, it's also not really present. So and these two are the major components for aquaculture, really the seed stock and the aqua feed. If you look at, say, vaccines and whatnot, then that's not really relevant, the health side of things. So then if you move back to, the production part, and just take the example of salmon as a species, the most widely produced and one of the most widely consumed fish in the world. There are about 2.5 million tons right now. And to give perspective of that, what we're trying to do for Barramundi Asia is to make Barramundi the salmon of the tropics. Barramundi is now only 80,000 tons globally. So we are still really a very small percentage of what the salmon industry is all about. So going back to the salmon industry, it's a fairly mature market. And even so, when people talk about GM technology for the past actually close to 2 decades already, so far in the market, there's only one GM salmon farm that's maybe more at a commercial basis, but still they are in the red. The name of the company is called AgriTech. I believe it is in the US and is selling to Canada and US, of course, because FDA allows it. They can't be anywhere else apart from that. I think the Europeans wouldn't want it. But yes, they've IPO'd already, if I'm not wrong, but they haven't been doing very well at all. And largely because, first and foremost, I don't think they have scaled up the production. Second, consumer acceptance is very weak. And third, I think, it's really hard to swallow if your GM salmon is more expensive than normal salmon as well. So I think there's these few conditions that's preventing them to scale. But largely for me, I think the consumer sentiments has been quite negative for GM. If you look at sustainability trends, people are looking at local, natural, and of course, lower carbon footprint and whatnot. So I think it's quite difficult for this GM salmon company to also push through because of these limitations.
Okay, thank you so much. I got a different question from the attendees. Do you think the current situation would prompt a rethink by local governments in terms of food security and supply? And as such, will smaller non-economic food production be subsidized by government, and therefore leaving for profit investors to look at huge scales opportunities? Does it change how you invest and fundraise? So maybe we ask the investors first, and then we can ask the fundraiser. So Honman or John, you want to take a stab at this?
Actually, I was thinking Alan might be in a better position to share some of his thoughts on the role of the government in driving, especially, obviously in the context of Singapore, and essentially, the government has identified the question of food security as being paramount to a national agenda over the next couple of decades. And as a farmer, one of the sort of originators of the urban farming scene in Singapore, I'd be curious to hear sort of what Alan thinks the role of the government has played so far and should be doing more going forward.
Okay.
Error you.
Okay. Just to clarify, I'm not a government spokesperson here, but having been the very first guy who did all this, I may be able to share a little bit on this. And I think what we are progressively doing is to learn about what agri is in Singapore and in the city. The whole idea of food security is an altruistic one, that you have to provide somehow for your community, because food touches the stomach, and stomach connects to the heart connects to the brain, and it almost becomes a political situation for every government to consider. It is a political imperative that the government obliges to provide for its citizen. And because of the 40 years or 50 years of progress, we have literally squeezed out every available farming opportunity for Singapore. And therefore, Barramundi Asia is right out at Semakau. We are on a rooftop. We're running out of space. The government recognized that. And the first way as a technocratic-based government will invest in technology, right? So bring in a lot of technology, skill up people, very much like what we have done in our early days for semiconductors and biomed, put all these things in and jumpstart an industry. And for the last 5 years, we're seeing different mechanisms being implemented, such as agriculture productivity fund, more land being used, government tax rating with companies like us using marginalized land to build farms. But we are also now starting to realize that there are certain things that worked and certain things that don't. I think reflecting on what Yin Chuan is saying, we are reaching a point in Singapore and in urban agriculture to see that we are no longer going to be able to reduce costs by simply putting in more money. And this is sort of we're kind of reaching a plateau. And I hazard an estimation that for fresh vegetables, the plateau is somewhere between $20 a kilo to $28 a kilo. That is cost out of farm. And I'm not sure whether another 2x or 3x investment would bring it down by 50%. I do not think that will happen. And I think if anyone is interested, they could have a chat and then show some of these data that we have collected over the last 1.5 years, both from our farm and from our neighbor farms and friends. So the question today is this: where do we want to go, and how much government should be involved? I think there is the government has done what they usually would do: put in skills, put in money, assist you in whatever you kind of wanted. But there is a lack of ability to scale. So yesterday, the news come out saying that Cameron Highland has gave a sort of a warning that in 3 to 4 months' time, supply for fresh vegetables will be disrupted. Incidentally, they say this all the time. Every time before Chinese New Year, the Malaysians, Cameron Highland will say, "Oh, this year we are too dry and therefore you don't have enough." And then the next year, we are too wet. And every year we listen to this and we kind of flip them aside and say, "Well, you just sell us." But I think this time is real. The supply chain disruption is real. And therefore, my challenge in this whole thing is that we are now looking at growing our farm 10 times in 6 months. We're working on a way that we can grow. And I think we after 1 or 2 years of, about 2 years of developing this, we're in a position to grow 10 times in 6 months. And then that will, again, cushion the shock. But the problem with this to the investor is it's not going to pay back. Building capacity for a city's food security is not a profitable business. It requires some kind of altruism, and it probably requires an investor to be physically staying in the city itself, right? So that my family gets to eat it, and maybe I get a first cut of the produce first. But therein lies the conundrum. To every investor out there, are you investing for profit, or is there profit or value in investing in capacity to withstand food disruption? I think the more I speak with people, the more this concept has returned the answer no. How are you going to invest in a capacity when you do not know when the next calamity will strike? And even as the calamity strike, are you sure you could increase your price before people say that you are price gouging? And that's what is happening to Crop. We basically emptied our entire farm to push in the supermarket. And after that, we are very conscious that at this time we shouldn't be looking at the price increase, right? And also profitability at this moment. So an investor that puts in money with us, primarily myself, have to really take a step back and say, are we doing this for the common good, or are we doing this as a responsibility to our investor? So the last 2 weeks, we kind of took the other route and says, for the common good, let's push forward. And I think profitability will return when we renegotiate this with the supermarket managers and their executives. So I think there's a light at the end of the tunnel, whereby after the calamity, after the pandemic, more consciousness will happen. People will value farm a bit better, and they understand how it actually operates and the business model behind it.
Does anyone want to take a stab at
So
this?
I have a question.
Yeah, go ahead.
No, I want to ask a question. Maybe it's just me. I'm always concerned about the people and the talents, right? So just now when Alan introduced himself, first thing he says he's a farmer. So this is actually a question for both the business owners and the investors out there. My concern actually for the AgriTech is actually the talents in the space. Ying Chen, your background actually is from civil service and you cross over, right? But for me, actually my grandfather is a farmer, but his children, his 4 sons, none of them are farmers. And we were just having this conversation with Kenny from Garden Asia a few weeks back. His biggest concern is where is the supply of next generation of farmers? We need food, but who is going to produce them? So some people may give the answer that the machines, the technology, we increase the yield, increase using GM to increase the yield and everything. But the thing is, end of the day, you still need the hands on the ground to do it. From all I know, all the farmers do not want their children to stay in the field, to stay in agriculture. So this is actually, I think, the biggest elephant in the room. How can we solve this problem?
So maybe I'll take a step back, sort of tackling this question, because actually it is something that I've been trying to work on for the past 4 years before I joined Barramundi Asia as well. You know, how do we build a talent base? And actually, I think to answer, there is not a good way to answer this question, because I think the answer comes in many different parts. I think first and foremost, right, whatever it is, people look at, having good jobs. So then the question is, how do you then create a good jobs to make sure that you slowly and steadily create that kind of talent pool? And I think for the government's perspective in the past, when I was in Enterprise Singapore, it is, I think, first and foremost to make sure that you can create a very successful, growing industry, because I think the growing industry itself then will be able to sort of soak up talent and slowly, create those kind of good jobs. But then, as we are trying to grow these companies, some of the companies, just like Barramundi Asia, prior to me joining, has been telling us, well, there are not enough skilled talents in Singapore for them to support their operations, which is why in a farm, our farm managers are all from France. Our founders, they were originally from Marine Harvest, primarily, and they are Europeans, most of them. So whether it's our vet as well, comes from Austria. So the point here is that a lot of the talents from the start to support the enterprise's success actually don't come from Singapore. At least for aquaculture. I think for horticulture's perspective, people are looking at plant scientists, also farm managers with an agronomy background. I think from the start, Singapore actually don't offer any of this, courses and training to support the kind of farm operation. So again, I mean, when you want to even grow the industry, there is already a challenge because, while farmers can carry on business as usual, you try to innovate, actually they may not be able to first afford hire or even source for the available talents for them to get to where it's intended for them to go to. So I think that this cycle does need to break, and I think how this can be overcome is really the new generation of farmers with new concepts entering the market, and with funding, financing, whether it is from angels like yourself, growth funding, and Temasek has been a huge supporter, Temasek Holdings, because they have invested in, say, Apollo Aquaculture, Sustainer, and those are the new farms, new concepts, vertical farms and whatnot, and they managed to even create their own R&D lab and whatnot. So this then now creates a virtual cycle. Hopefully it will continue, and this new format then can help hopefully create that new industry. Similarly to what Barramundi Asia is also trying to do, we are also trying to raise funding to go into this AquaTech, and we have already acquired Allegro Aquaculture, which is a genetics and breeding company. We have developed our own vaccine company, so we have our own AquaTech portfolio as well. And then we're looking at farming in a whole different way across the whole value chain, application of technology, and in general, the environment. Although we are a marine aquaculture farm, we have the environment suitable that we think can create good jobs. You can farm on land because you're a land-based nursery, for example, and it can be in an aircon room if that's what young people these days must have. Sure, we have that kind of environment. So we can provide a kind of good job, but when they're in for some adventure, we also have the marine farm component where they can go out to sea and feed the fishes and so on and so forth. And then we can provide opportunities in Australia and Brunei, maybe even on a sales side in China and then US. So then that becomes, hopefully, you know, when we become a successful company, multinational, then we can then create a good jobs. So now to answer the question, I think multifaceted. First and foremost, talent pipeline is needed to help local enterprises succeed, whether it is importing from overseas or take 3 to 4 years, send our students overseas to really take up courses relevant to farming. Hopefully then, you know, tie them back to the local industry as part of culturing that local talent pipeline. But then the more important thing to me is really supporting the success of current new entrants or, you know, farmers who are also transforming and are in a trajectory to be part of this industry transformation, so that we can build this virtuous cycle of business growth and talent flow. Yeah, so that's my response.
Okay, wonderful. For some reason, these attendees are very shy compared to last night's pitching session. We got so many questions and answers. So maybe I open up for one round of comments from all of us so that we can then close this session. Maybe we start backwards. John? Your last.
Sorry, what sort of comment are you expecting?
Yeah, whatever you think about this current situation or your company, maybe you can give a pitch over your company or blah blah blah, right? Just or your view over AgriTech situation now.
Sure. I think I would echo one of Alan's points, and look, again, I have to sort of be clear about which hat I'm wearing right now. I think this is probably more from the John Friedman as an angel investor, but increasingly, you know, the narrative which we're trying to craft at Ag Funder is one of, you know, more of a mission-focused investment, a sort of triple bottom line type investment ideology. Up until now, you know, my perception of, say, the Singapore startup venture capital ecosystem has been, you know, largely focused around sectors and industries which perhaps people are more familiar with: finance, medical, obviously established industries here in Singapore, where they feel they comprehend, they see the sort of the commercial realization, etc. You know, agriculture, I think it's fair to say, despite being such a passionate food nation as we are here in Singapore, and we love our food and we can't stop eating it, many people don't really appreciate sort of where it comes from, the supply chain, all the rest of that, the truths and the difficulties and the challenges of the food and agriculture system. And I think to Alan's point, and the message that I would hope to get across is we as a community of investors and supporters of startups and SMEs should try to deploy or use this sort of triple bottom line lens a little bit more. And, you know, if I'm the silver lining of this whole COVID situation and lockdown and border control is, you know, it's not about 30 by 30, you know, domestic food production up to 30% by the year 2030. It's about 100% today. If, pardon my French, shit hit the fan, we need to solve for our food production today. And if we can all be sort of responsible investors and citizens, then we should be backing the likes of Comcrop and Barramundi Asia, and, you know, these startups and future food providers to us as a nation, and hopefully beyond our own borders. So yeah, putting my money where my mouth is, essentially.
All right, thank you. Herman, closing statements?
I can't agree more than what John has just said. And I know John, in a very short period of time, not as long as you, Tekmo, but I come across, we share a lot of things in common. And he said everything I wanted to say, but I just want to add one more thing because there were a few questions, one from Alan, one from Xiaoning, right? For what John has mentioned, I think we should all start looking at, and this COVID-19 crisis, actually, I hope all of us, but myself definitely, I think John is, looking at things by just not saying because this is cheap, this is good, so I'll consume more. We should start looking at this, whether we are doing it responsibly, whether we're doing this sustainably. These are the things I started to learn years ago when I went up to be, in the chilling food zone, and then later on put money where my mouth is. And we start looking at this. And I hope that in Singapore, investors, even governments, I think we should start looking at priorities. It's not just because it's efficiency, because this is the most cheapest way to grow food. So we continue to eat way in a very irresponsible way. Like Crumb Corp, I mean, I have been, actually my first investment or look at the investment is in indoor vertical farms, but we have not invested in any of them because it just cannot make the number works. For example, in Singapore, 70% of the cost, and Alan, correct me if I'm wrong, 70% of the cost is in electricity, labor, and land. And this is, in Singapore, you just can't solve this. But then we should relook at this whole thing and say, is cost the only issue to determine whether we should grow our own food? So I agree with John. We should look at things very differently. Of course, we can get help from the government through many different ways. So when people keep asking me, and now I moved to the plant-based meat investment, when people are asking me, why, Hanman, is plant-based meat more expensive than real meat? Well, the real meat industry has been very, very efficient, and there's a lot of subsidy. If you take a look at a pound of beef, overall, you take into cost of the environment, cost of water and all this, is actually not that cheap. So these are the things people don't think about it. And it's difficult to ask the industry to do it. It's just my personal opinion on this, but we consumer need to do something about it. Actually start with that. And then for Xiaoning, I wanted to answer your question earlier about the not enough talent and all this. I think you're spot on, but having spent 2 years in a farm in one of the last 3 pieces of black land in black soil in China, right? I see this shift. In fact, in Thailand, where I spent a bit of time as well, China, I see the younger generations are actually going back to their farmland and start doing farming, but not in the same old way as the farmers does, wake up 4 o'clock in the morning and do all this, but they're actually using technology. Now, there's this very, if I may spend the next 2 minutes talk about it, there's this traditional way of open field farming, even that itself, using big data and machine learning, there's a lot of information and knowledge that could actually be passed on to the new generation instead of the old way of, the grandfather pass it to the father and so on. But then if you take a step back, I've been working with a company called Benson Hills. They're specialized in actually modifying seeds to get the efficiency, either it's yield or nutritious value, without having to have increased pesticide and so on. So there's area in this where looking from the seed perspective, you can still grow the same way you're growing, but the seed itself, make it easier, shorter, better yield, and so on. Then you move all the way to indoor vertical farm where you grow vegetables in 10 stories of controlled environment. I founded a company that does seed breeding, and essentially taking the seeds in the open field, modifying them, whether through gene editing or non-gene editing, to be specialized in these controlled environment. So a combination of talent and technology is where we see hope is, and that's where the area we're going to invest in.
Thank you. Yin Chen?
So maybe I just want to close by saying that first and foremost, I think investing in agriculture can be highly lucrative. And from an aquaculture perspective, again, if you just look at the salmon industry, just naming a few companies in my stock list, Mowi, Salma, Greg, Leroy, Norway, they can all easily earn 20 to 30% profitability. They are like billions of dollars of companies. If you reach, for example, for fish, 2.5 million tons, and that's where we are going. We want to make barramundi 2.5 million tons as well in terms of production and sales. And that's certainly possible. And to us, at a certain tonnage, the unitary cost makes sense. And from then on, it's really raking in profits. But the whole business itself, while profitable, while having the potential to be profitable, it is actually highly complex because we are managing a biological asset. So then to answer also Robin's question, even with the focus of AgriTech in Singapore by local government or even across the world, the matter of fact is just not many investors know how to manage value, assess the risk in agriculture. Or aquaculture for the matter, it's even more complex because our growing cycles is 2 years. Maybe for plantations, it's even more complex because it's longer, but many of them are already commoditized. So it's complex to understand the risk. And therefore, unfortunately, it's not. I don't think it's because the government wants to crowd out private investors, but it's just a lot of the businesses, at least for my opinion, Singapore farms, we have to go to the Temasek, the like of the government-linked ones, because they are the ones that I think forward. They think cheaper bottom line to invest, and they're more sophisticated in, I guess, valuing agriculture and agriculture for now. So I really want to encourage more people to come and participate, learn more about the industry. I think there are good deals out there. Of course, obviously, I represent Barmani Asia. I think we are a great deal as well. So you can speak to me and I'll be happy to share more.
So this is a wonderful pitch for why we want to do the workshop. So more angels can learn about this space and figure out how to invest. And Yin Chen, don't forget to apply at our website so that we can help you to fundraise as well. So Alan, closing statement.
Okay, I'm going to try this share screen thing. I'm just showing you something. Let's see if this works. Are you all seeing what I'm seeing here?
Yeah, thank you.
This is the shelf at 10:30 this morning at Vivo City Hypermart. It is stocked up yesterday at 10:30 p.m. Somebody put tomatoes on it, mushrooms on it. This shelf contains about 300 packets of fresh vegetable, freshly harvested yesterday morning. When everyone sees this photo, the first response is, "Oh, wholesale," But when we farmers, my guy sees it, he says, "What are we going to do on Monday? We are not going to be able to supply this consistently." And it is a big mission to continue to make sure that the city has food. So I sat down with my team a couple of days ago, and we discussed this. Every one of my team are young people below 35 years old, Singaporeans, deeply passionate about what we are doing. And so I told them, I think there's a high level of uncertainty that we may go out of business in 6 months. And today, what do you tell your young people when you said that, we have nothing more to give from our farm? And I sat them down and I tell them very frankly that when you have nothing else to supply, give hope, and that we are still working on it, that give hope that to the community or the citizens that there is progressively work that is, people are hardworking behind this, right? Because while we are going to have short amount of disruption, people are just going to stop supplying to you because it's easier to go from Cameron Island to KL than to come across the causeway. But there is a lot of people who are willing to put their hard work and blood, sweat, and tears to go and get this done. Whether you're going to be able to get investment or not is a secondary question. Whether the industry as a whole must and will and must go ahead is the important question, the important imperative. Just like Yin Chen say, right, the bandwagon is moving very slowly. There are some people already on it. While we are looking at how we scale in 10x in 6 months, we are also very mindful that these are times of extreme uncertainty. And the only way forward for ComCrop is to continue to look at where are we able to survive, what niche can we do, what can we bring as a company to our community. Today, what we are looking at forecast is that we will probably need, as a shock absorber in Singapore, close to 300 tons a month of production, which means today we are probably at about, all the farms combined is probably at about 100 tons of production per month to 200 tons per. We need another 300 tons more so that we can entirely cushion up to 1 month of food disruption. This is a tremendous opportunity for the vegetable farmers. Where the money is going to come from to scale, that's a big question. But where we are going to go is a very definite target. And is perhaps running at the risk of being too lofty, but it is something that I'm very confident that we can achieve. Basically because we already have technologies that is brought in from overseas. We have embedded skill set that we are transferring from precision engineering technicians, undergraduates, polytechnic graduates who are from different fields that are coming into the market. I'm not really worried about all this. What I'm really worried is that the losing this momentum of pushing forward to 300 tons a month of local production. And I believe this is achievable. I believe that how we're going to do it, we got to take it one step at a time and be very realistic on what is our current difficulties as an industry. But I'm sure within the next 1 year, post COVID-19, this will happen. And I will end with that. Thank you.
Thank you for both the 4 panelists. This has been so fulfilling for us to listen, not just from the investor viewpoint. So before we close, maybe give me an opportunity to get our Chief Angel and AngelCentral to make closing remarks. Yeah, Xiaoning.
Well, you just throw the arrow without preparing me. Okay. So thank you everybody for coming today. I mean, we overrun a little bit by 15 minutes. I hope you guys don't mind. But I feel that this is really quite a tough period, and I was really personally, I was telling Dustin, I'm very grateful that our panelists actually and our members actually don't mind the cancellation and the postponement. And then the panelists actually went forward, actually straight away on the WhatsApp text. Everybody was saying that we can still do a panel and do a sharing because we want to reassure everybody that Singapore food supply is there, and then both the farmers and the funders are all behind it. So thank you very much today. So for the attendees who came later on, right, we will put up the video on our internal site. So if those people who miss it, they will still have a chance to hear the wisdom from the panel. Thank you very much.
All right, thank you everyone.
Have a good Saturday.
Yeah.
Bye.